Hi everyone, so it is going on nearly 7 p.m. on Sunday the 30th of August 2020. I'm having a look at the global indices. Start over the US. I'll start off specifically with the Dow, Wall Street. So what I want to mention on here in isolation, daily looks good. Any kind of pullbacks could be buying opportunities on this. So in isolation, looks relatively healthy. No real comments there. It is almost at 29,000. Looking at it here on the, which I would figure as a round number, close to all-time highs would be significant. So that will just mean that I'm a little bit cautious. The weekly is now officially in my mind, at least looking at previous cycles, is now entering overbought on the weekly in terms of that. So actually, it's not inconceivable that the daily, we could see Monday or Tuesday early this week, I could see the market hit up, tap 29,000 and then take a bit of a breather. But I do think at some point now it's becoming, I believe we're entering that territory. To me, I'm leaning towards the market's going to take a real stretch at doing that. They might even fail, but I think that they're so close, they might as well just want to try and do that. The monthly is, almost at the top of its those previous highs and that range. So it's not ridiculous for it to perhaps try to do that. So leaning towards it, at least certainly I think it's fair to say that it's going to attempt to do it. Again, looking now at the S&P, the isolation, the daily in isolation, I beg your pardon, again is really beautiful. The quality of this is fantastic, especially 4 hours. So if I just go down to the 4-hour time frame here on the right hand side to compare that, there's really good intraday opportunities, probably even down to say 1 hour time frame. There will be, for particular traders, actually even probably closer down to 15-minute time frame, there will be some potential buying opportunities for day traders. And so that's all good. Looking at it there on the daily, on the lower time frames, again, any kind of retracements or consolidations would actually make sense this week. But again, it's also potentially very close to kind of like 3,600. It's now broken 3,5 and 10 almost. It's broken up above those highs, a solid breakout. I am definitely going to say in this case, looking at previous cycles, also look at the S&P now venturing into overbought territory. So it just means extra caution, breaking onto new highs on the monthly. The candle's all solid and bullish. So what do I mean when I say that? Increased caution while at the same time the markets, look nice and bullish, meaning that I am aware of the volatility we experienced early in the year, that we could have a second kind of a tremor. That is a possibility. There are times when the market has plenty of room to grow. At this point in time, I'm of the opinion that we are generally in a bubble, but the bubble could continue to last for several more months, maybe even another year. That is the case. So when I say that, I have a bigger picture awareness of sensitivity of the market kind of, potentially being, let's call it false bullish. At the same time, that doesn't mean that I wouldn't stop trading it. I will continue to trade it. I will continue to trade with the trend. I will always trade with the trend. What it means is that there's a degree of confidence on a scale, and if during previous periods over here my confidence is 9 or 10 out of 10, that there's very little that's going to potentially threaten the market over the coming weeks and months, then I'm at my happiest. When it's at a point like this where I know that there is some danger up ahead, I'm just extra cautious. I still take my trade setups, but I might reduce my risk. I'm just going to be that much more selective about trade opportunities as opposed to just generally across the markets. Okay, so hopefully that's a decent explanation. Looking now at the Nasdaq, which of course is generally the most bullish, there's no doubt in my mind that we're not in Kansas anymore. This is now almost certainly breaking 12,000. I beg your pardon, breaking 12,000. 20,000 is not a real word. This is now absolutely at some, again, I've spoken about this separately. It's long overdue for a correction. And when the correction comes, 10,000 is going to be easily achievable. But in isolation, the weekly looks really good. It's also away from the moving averages towards the top of its channel. And so any corrections or retracements on the weekly are also welcomed and probably healthy. We've had a couple here with sort of a brief consolidation. Looks a little bit like a consolidation here, but effectively it was just range bound and then broke out of the range and carried on. That's acceptable to me. Daily looks good. Again, any kind of retracements back down would be good. We're at a round number, 12,000. So actually taking the 12,000 into account, early this week, it would be reasonable for there to be some kind of a reaction against that before maybe taking another run up or a break up and a retest. But some acknowledgement of the fact that that's all-time highs and it's another round number, it's another big number, something that the market shows that it acknowledges reality, that it is hitting some kind of a price level would be good. And so again, I'll be looking for longs on the markets that visually show the greater stability. So when I talk about general awareness, I'm also saying, yes, I know that there could be a potential bigger term correction or a weekly retracement, but even a daily retracement isn't necessarily a signal of a bigger retracement. That could just be within this. We could keep going for a couple more months, but I could have daily retracements every couple of weeks, and that's also acceptable. It's trickier, but it just means I'm explaining why I'm prepared for that, whereas in a couple of years ago, it wasn't necessarily the case. Now, let's have a look at, so the Russell 2000 also coming up into 1600. It's been kind of bumping its head there for a couple of weeks. I'm going to see if it does manage to break through that. If it breaks through that, yes, it's going to obviously continue up towards 1700, which is good. And that might present some good opportunities there because it'll be catching up. Then as we leave the US and we head towards the UK, so we're now looking at non-US indices. This is where the picture starts to change. It's been gradually diverging for the last 2 weeks. And so here it's still range bound within this area that I've highlighted on the chart, still looking at that, still looking more bearish the last 3 weeks, potentially looking to break down and then continue this very subtle downtrend if we break these lows here from early August, end of July. That would be, but then I think it would accelerate potentially and start to head towards that. So the monthly has produced that swing high. The current monthly candle didn't break last month's high, and it's potentially going to potentially break the low. So this could ultimately turn into a swing high and then become a little bit more bearish and follow through on that, which means this could be the early stages of continuation down. If it does, it'll accelerate. It never goes down gently, but once it's committed to it, there'll be some big drops. Early days though at this point. So that is something I will be keeping an eye on, is a break of the low of certainly of this month's candle next month, and just keeping an eye on this. So that's the FTSE. Then EU stocks struggling with resistance, which ironically could lead to a breakout here. It's sort of range bound on the daily, slightly higher lows here, definitely struggling with some resistance there, but could actually lead to a breakout. It's ignored last month's bearish candle, which is why I say that this is more bullish than bearish, because it hasn't followed through on that. So that's the EU. So the UK looking quite weak. Germany also looking quite nice and bullish. So in isolation, if I separate that, the UK is just not looking that strong. The US is looking very strong, and parts of Europe are looking quite strong as well. Not as strong as the US, but certainly looking like they want to test and continue to go on to new highs. But this level here of 13,237 that I've got highlighted here, 13,240, is definitely an area of resistance. So I'll keep an eye on it this week if we can get through that. Then heading further east, so this again also not following through on last week's bearish candle, still maintaining high lows on the weekly, so still looking just that little bit more bullish than bearish, but also struggling with resistance. So nothing magic there, just keeping an eye on that. The Nikkei struggling with resistance there at just above 23,000 and going into highs there at 24,000. I should put some levels in there, but that looks like that's going to just keep trying to test that level. And then the one that's of interest to me, of course, is looking at the ASX here, which certainly struggling with that 6,200 level. All right, if not 6,100, that area there, it's finding some strong resistance and finished the week much lower, much more sort of bearishly. And actually, so I was looking at this as a potential kind of bullish breakout. So I'd have to see a recovery almost on Monday to see it go right back up, back to that level for that to maintain a slightly higher low on the week anyway. Nice bullish candle here. If this does ultimately produce another bullish candle in the next couple of weeks and maintains these high lows, that actually could be hinting at a breakout. But looking at this one at the bottom of the list of the charts that I've looked at, it looks just doesn't look as bullish as that. But that is generally speaking a bullish breakout pattern, and so I'd like to see a recovery and see it take another run at the level. So to kind of recap, there's some resistance levels that are being encountered on the non-US indices. We're sort of struggling more in certain countries, such as the UK, and less in a few of the other countries, mixing it up a little bit. But then as I go back and have a look at the US continues to look bullish. I'm prepared for some potential daily retracements this week. I know that on the horizon in the near future will be some weekly retracements at some point, just corrections, taking a bit of a breather for a week or two before continuing, and of course keeping an eye on those monthlies being generally speaking quite bullish. Again, I think it's likely we're going to see that continue until the elections, because I think that that could potentially come down to policies with regards to taxes and stimulus that might ultimately change the decisions, whether Trump remains in office or whether Biden comes into office. Whichever outcome there is could potentially then impact the policies, and therefore we could just be seeing a lot of buying enthusiasm based off that. That's one of the potential explanations for it. So that means we've got a couple more months of that potentially. And that's it. So this week I do see some potentials, but some I'll be more bullish on. Some of them I'll stay away from and keep an eye on from a distance. Others I might even look for potential shorts if they continue, if they do start to edge further down, which would be, for example, the ASICs or maybe some of the Asian sessions, Tokyo side, as well as potentially maybe the UK.